Hello traders, this is Rich from Tradesight. This is the market preview to get you ready for the coming session. This is going to be for Wednesday, the 5th of June, 2014. We had another update today. It was kind of an odd day where we had a decline, then a strong recovery, and we kind of walked up on what was mostly very, very light volume. This is the first day the market internals, we're a little bit better. We're plus 118 issues on New York and plus 300 on Nasdaq, which certainly isn't going to get anybody excited. But at least they weren't divergent today, so that's a small positive for the market. But they are starting to level off here on the New York side, and we'll take a look at the individual charts. One other thing to keep in mind here is the trend for the third day in a row had a relatively low close. We had some lower ones. Yesterday was real low at 0.65. Today we're at 0.86. So we're starting to get stacked up here with a lot of low readings. So we're going to take a look at the 10-day trend in just a little bit. But let's move on and take a look at the major charts and see what they have to tell us. All right, let's take a look at the futures. Let's look at the pure price action, which we haven't done in a while. Here are the NQ futures, which have been relatively weak versus the broad market. We had this decline back into the midpoint here of the trading range. We're just grinding here against that as the broad market was actually whacking out new highs. And right now we've come back up here to recover, basically back up to the previous area. This is actually a new high close on the move. But really hasn't released out of this range. As you can see, we do have a little bit of a cup and handle potentially setting up here. Here's your cupping action. Here's your handle right here. This little sideways action. So that definitely could be interesting if the market can get up and get going. The one thing to note though is that on this decline, you can see all the volume associated with it down here. We got some better volume down in here, but now the volume on the futures anyway is really just starting to dry up, even though we're in this area here. If we do break out to the upside, we're definitely going to want to see the volume pick up and not have just kind of a seller strike, if you will. All right, now we're moving on to the ES side of the market. You see, the ES has a little different design here. You can see it was already making new highs while Nasdaq was really taking that sharp dive to the downside. Made a new high in the move, new high close on the move. One thing is we're still contained within this ascending training range and haven't really gone up to challenge the highs yet. So we definitely could walk back up there and still be within the overall pattern that's been in place for all this time. You can see that this is just a really, really well-defined pattern. This is going way back now. So this is definitely something that's been in play for a long time and needs to be respected. All right, here's a look at the 10-day trend. The 10-day trend is now at 0.91, getting close to that terminally overbought threshold. This is the turbo chart. Just because we've got the 10-day trend up here, and we've got the S&P here representing the broad market. So we'll give it a cute name called the turbo chart, just because it shows us a little bit more than just the 10-day trend. But what I want to talk about is the relationship of the 10-day trend and the S&P, which reflects what the market's doing. So, when we're in between the bands here, we're just kind of neutral. But when we get outside of the bands or even touch the bands here, we're either overbought if we're touching 0.85 or lower, or oversold if we're above 1.35 above the green line. So above the green line, the market's oversold. Below the red line here, it's a contraindicator. Below the red line means we're overbought, and the market is going to have to adjust for that. Now remember, when the market gets overbought, it can do one of two things. It can either go sideways to work off the overbought condition, or it can start some corrective activity. And generally speaking, the more the threshold gets penetrated, the more corrective activity happens. So we haven't even touched the 0.85 overbought threshold yet, but if we do, here's what to expect. Take a look back here. Here's a penetration below that level. What happened to the broad market? The broad market went down. Okay, broad market got overbought. The overbought reading was present here in the 10-day trend, and the market corrected. Here we got overbought, oversold, got above the 1.35 area. What happened? It made a bottom here in the market that led to, a multi-month advance. We have a touchdown here of the 0.85 overbought threshold, and what happened, basically leveled off and started to go to the downside here a little bit. Got up close to it here on an oversold reading. Didn't quite touch it, but we did have a bottom in the market, and we did ascend after that. Then we got quickly we went from being oversold to overbought when we got above this, below the 0.85 threshold, and that turned the market back to the downside. And you can see how it works. A couple touches here, that basically was leveled off price and worked off the overbought conditions sideways. Another touch here basically just arrested the ascent of the market. We had to go sideways here. Wound up getting oversold here, and we made this bottom. And after this is a real high reading, by the way. This is 1.53 on the 10-day, which is a big reading. And then that was the last real buy point for the market. We ratcheted back to the upside and been moving to the upside since, without being overbought or oversold here for basically the better part of this year. So, for the last many months, we've been in a neutral band here in the 10-day trend. So if we do hit that overbought threshold, that's going to be a very notable development, and probably wind up changing the character of the market in general. So we're going to stay on top of this, and we'll let you know if and when we do get that overbought reading from the 10-day trend. Here's a look at the XAU, which is the white line, versus the gold futures. XAU was leading them to the downside. Just keep an eye on the XAU. It's basically flat right now, but if it does start to recover and start to head back up here, we could see some better action back to the upside in gold futures. Gold futures are right now just a little bit below that key 1250 area. It's a big Murray math level, and definitely a level that's been in play. There's a lot of options right around that 1250 area. So if we do start to see some upside here in the XAU, the gold futures themselves will start to pull to the upside. Here's a relative strength chart of the NDX versus the S&P. S&P's been pretty linear, as we had seen before in the pure price chart. Now you can see that we're starting to get a little separation here in the NDX with some relative strength, trying to rotate back into the Nasdaq side. Remember, the Nasdaq side was relatively more strong on an internal basis. In the S&P side is starting to show a little fatigue. So starting to see a little rotation back into the NDX overall, at least at this point in the market. Here's the cumulative advanced decline line. This is just the daily. We'll take a look at the weekly a little bit later in this week. But what we're seeing right now is starting to see potential for a little bit of a bounce here in the Nasdaq side. But the problem here is the New York side is starting to level off here. So the New York side is making new highs. The ES side is making higher highs, but the cumulative advanced decline line is not confirming that right now. Something that you just want to pay attention to on a daily basis, but what you really want to look at is the weekly close. At the end of the week, if we've made new highs in the market and the cumulative advanced decline line is not confirming that, then the market's going to have a lasting problem. So don't have that condition just yet, but we could be leading there. So definitely be on top of this chart. Let's keep checking in on this one. This is very, very important. All right, taking a look at the individual sectors. Today we had pretty decent action out of oil services. Started to get a little bit of a retreat here in the transports. The transports weren't all that strong, but the oil services kind of picked up the slack, which is okay. Decent price action out of the BKX, kind of just holding their own, and the defensive XAU was kind of lagging. We'll take a look at the early cycle multi-sector chart. We're going to be looking at adding the BTK and also the SOX. Semiconductors still showing good relative strength here, pulling to the upside here. The BTK continues to recover, but is obviously not breaking out to new highs. So there's definitely money still rotating into the semiconductors. You can see that they were definitely one of the better performers over the last 3 days or so. All right, and finally, here's a look at the cumulative. Speaking out of turn here, I'm looking at the individual sectors ranked from best to worst. You can see the BTK recovering. That was a pretty strong day there. Broker dealers were also pretty strong. Bottom of the list was the XOI, which was pretty weak. The drug sector was weak. Today the transports were kind of just stuck in the mud. Didn't do too much. The banking index was also kind of weak. That's kind of offset by the broker dealers being a little bit strong relative to the big banks. Just not a lot to be learned here. I think is the real takeaway. More of a Nasdaq focused day with the Nasdaq recovering fairly well. Just a matter of can they break out a cup and handle or not before we get to getting terminally overbought with the 10-day trend. That's going to be the key here. And even if we break out in the Nasdaq and the NDX, continue higher in the ES, if we do record that that overbought reading in the 10-day trend, that's just really going to put cold water on it and keep it from really going, and actually is going to probably mark an inflection point. So it may be kind of a buying climax, if you will. So that's really important stuff, and that's what we're going to be focusing on for the rest of the week. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.